Research in motion. Horrendous prior record. Pathetic stock. It only went from probably $70, $80 down to $4.50. But it changes. Builds a little base and comes out of it, and probably the first time we'd look at it is when the earnings start showing and you get a base. We did have a cup with a handle there. If you didn't buy it there, you would have bought it on the flat base that ran up afterwards. What's the definition of a flat base? It has to go at least 5 weeks. So you get 1, 2, 3, 4, 5 weeks. And it goes charging through an enormous volume. It's probably up 300%. So one of those two bases, you should be into the stock. And you have a big run up. This is quite fascinating because now you have a huge run up and the stock holds tight. And that's a high tight flag. In other words, it will not come off. And look at those closes. 1, 2, 3, 4, 5, 6 weeks. 5 out of the 6 close almost at the same price. And then it just takes off and really charges through there. You also had a couple of support weeks where the red week pulled back and it closed in the upper half with some volume and all. So there's your high tight flag. Now, what does a high tight flag mean? Well, that's the strongest pattern you can have. The stock has gone up and at least doubled, and it's holding tight now, so it probably will triple or more. So you buy this coming out of the high tight flag. No one should miss that because that's one of the biggest patterns at all. And yet it takes getting acclimated to it because you're going to look at the stock and say, gee whiz, this stock was 12 and now it's 25 or something. And you don't become afraid of it just because it's run up rapidly. The fact that it's run up rapidly and holds like that says this stock could triple or something. So you buy it. And huge 9 weeks in a row up on the first leg of the move. And look how far you moved. And we have a rule, if you break out of a base and it goes up 20% in only 1, 2, or 3 weeks, you got to hold it for at least 8. So this one runs up 9 weeks, and by that time, you bought it 25 and it's 50. It's doubled, and it's way up above your prior purchases. So you now have a cushion and you can give the stock lots of room so you don't get faked out by that first undercut there with the volume being up because you close at mid-range and you've got this huge spread and cushion to work with. Now the next time it tries to break below that, there's no volume. So you come out of it, run up a little bit, and we build another base that you can buy. And this time we see erratic action. You get 2 reversals on huge red volume. The first time we've seen something like that. So the first time, if you didn't sell it then, you go straight down and below the 10-week line and you run straight back up, straight down and straight up, and then you reverse with huge volume again. So one of those 2 weeks, you're selling out of that stock.